The whole of the situation is an enormous squeeze. And that, I think, is the initial point about where the silver price is going in depreciating fiat currencies. So we're at this fascinating once in a lifetime juncture as far as silver is concerned. And I think I would confirm Michael's analysis completely. I mean, he's coming at it from a completely different viewpoint. But what I see, it's just ringing true what he's saying, that this is going up, and we're going to see this in triple figures, I think, in the not too distant future.
I'm expecting, actually, you might need a bigger camera or zoom out lens. I'm expecting I'll be shoulder pressing $7,000 in the not too distant future, and you guys all better watch out when it starts hitting the triple digits, because I'm going to be so hench. You're all going to be running scared.
Something is happening in the silver market right now, and most people don't see it yet. As we move through the final days of December 2025, silver isn't crashing, and it isn't exploding either. It's doing something far more dangerous to the system. It has gone quiet. No deep pullbacks, no panic selling, just tight, controlled price action that refuses to break down. Veteran traders know what that silence means. According to Francis Hunt, this is exactly how every major silver breakout begins. Not with excitement, but with pressure building beneath the surface. Momentum isn't being released, it's being trapped. And while the charts are tightening, Alasdair Macleod is warning that the physical market itself is under strain. Supply is thinning, liquidity is quietly disappearing, and confidence in fiat currencies continues to weaken. When price stops behaving the way it should, when supply tightens at the same time demand accelerates, markets don't ease into the next move. They snap. And when silver snaps, it doesn't ask for permission.
That's your little continuation pattern. It was staring me in the face and damn well all but missed it. Beautiful little upside HVF, and you're breaking higher. We keep getting continuation patterns. In other words, sideways movements, rather than being correct, are kind of corrective. It's like a pullback without going down meaningfully. This was essentially a pullback, and what you're doing is there you are trading 60.712. I would tactically right this very second, not wailing right here. I think it's moved well for today, but in terms of the general move tomorrow, the week ahead, I'm seeing further upside. If you recall, we said 91 is going to be our first point where I think you could stall a little bit for a short while as we start approaching the foothills of
triple digits.
Yes, I think that's it. I've still got my particular broker on, so we've been live trading. That's so there were some P&Ls in there, but I mean, we really trade. Our community members are at all-time highs. We've been aggressively. I've been telling them this is the trade of the year. It is the biggest performer of the year, silver and gold. I would include platinum in that. It wasn't counted. It's a very small market, platinum. Those are the performers of the year. It's killed everything. It's done a significant multiple on the S&P and many other things. And the one thing I'll say is actually coiling up, which is going to have a real catch-up moment, is when the miners, interestingly, we had this moderate pullback just on the coming into the close. It was about 0.4% there. And some of my favorite equities were down 4% on the downside, the miners, on account of silver ticking down. But they're not up the same beta for this move to the upside. In fact, some of them are not even at all-time highs. So we are storing up a coiling spring on the miners. You're going to get surges. There's going to be more surges. Is there any reason specifically today more so than any other day? I don't particularly see something, but people like to do what I call toe tagging, and they'll jump on so-and-so said something, and that's the reason why silver's gone. If silver's going to 333, it's going through 60 on the way, isn't it? And it's part and parcel. Interesting little tidbits to really get the silver guys a little bit motivated and pumped, because a lot of my messages sound very doomer, because I really just want to talk truth on this channel, hard, cold truth, even if it upsets people. But the one shining light is truth is this block of 100 ounces here, and price discovery is happening. And this makes me smile. And I've got more news for you on that. One thing I've been seeing, and this is coming off the newsreels a little bit, so I'm reporting secondhand, but there's actually been an outlier number of engagements in deep out of the money call activity for this February 2026. And I'm talking about strikes at $80 and $85. So that doesn't mean it's going to happen by February. And I'm not got the expiry dates when in February that is. But you could have the possibility holds that it could be, or certain people think that there's a risk of that sufficiently enough to want to hedge against that. So if you were a bank that maybe were structurally short silver in some way, you might hedge by doing that, by buying calls, or you just have speculators with real strong feel. Remember, these people have bought puts. Now, they would have been probably bought in the 50s that are expiring not far off. Basically, the year's done, aren't we? It's Christmas season right now, not many shoplifting days left, and then it's January and a little smidge of Feb. And some people are buying calls thinking, you know what, I either want that lottery ticket or I want to hedge against a position that's going to hurt me real bad if this thing gets disorderly. So that points to some information that there's extra normal volume there as well.
By December 2025, gold has already reasserted itself as a monetary hedge. Central banks remain net buyers, geopolitical risk remains elevated, and global debt levels continue to pressure fiat currencies. But while gold has been steady, silver is where the real stress is building. From a technical perspective, Francis Hunt highlights a critical shift in price behavior. Silver is no longer experiencing sharp pullbacks. Instead, it is consolidating sideways, a classic continuation pattern that signals strength, not exhaustion. Hunt identifies the low $90 range as the first meaningful resistance, where price may briefly stall before attempting a larger breakout. Beyond that, his charts do not invalidate a move into triple-digit territory. What strengthens this technical case is what's happening beneath the surface. In the options market, deep out-of-the-money call options for February 2026, with strikes near $80 and $85, have shown unusually heavy activity. This is not short-term speculation. It suggests longer-dated positioning, either institutional hedging or early asymmetric bets on a disorderly upside move. From the macro side, Alasdair Macleod emphasizes that silver is still being priced primarily as an industrial metal, despite its monetary role. When measured against gold, the basket of industrial metals is trading near its lowest relative valuation in over a century. Macleod argues this distortion is the result of decades of paper market suppression through derivatives and fiat expansion. That suppression is now breaking down. China, the world's second-largest silver producer, has introduced tighter export licensing extending through 2026 and 2027. Macleod interprets this as a strategic shift away from price management towards stockpile protection. At the same time, liquidity in major hubs has thinned. Meanwhile, India's demand is accelerating rapidly. Industrial growth, solar manufacturing, and government subsidies are consuming vast quantities of silver. Crucially, scrap silver is not returning to the market. Even at higher prices, holders prefer silver over depreciating fiat currency. This combination, tightening supply, rising demand, institutional positioning, and strong technical structure, creates what Macleod describes as an enormous squeeze. And historically, squeezes do not resolve slowly.
I think the 2 points worth making. The one real macro point, I think, which everybody should understand, is that if you look at base metals, industrial metals, because silver is being priced as an industrial metal at the moment, then a basket of these industrial metals has fallen in value, priced in gold, to the lowest level for the last 120 years. Now, when you look at the price in dollars of the basket, I mean, it's sort of up, sort of 20, 30 times over that period. But priced in gold, it is now at an 80% discount to where it was in 1900. Now, individual components obviously change because, you've got technological change. For example, some commodities get used more than others and so on. But if you look at, if you look at the copper, that is central to the whole thing, Dr. Copper. So I think that's the first point I'd like to make. Silver is being priced as an industrial metal. The whole cohort of industrial metals has been suppressed by the paper game. The paper game, both in terms of derivatives and also in terms of fiat currencies. So that's the first point I'd like to make. If you look at the market now, however, that's sort of and then a further interesting point. China has been controlling the price of silver for at least 2 or 3 decades. Now, China as a silver miner is the second largest in the world, and also she's been importing doré, both silver doré, but also doré of or if you like, ores, copper ores, nickel ores, lead ores, zinc ores, and all the rest of it, which of course is something like 60–70% of the supply of silver. She has accumulated an awful lot of silver secretly. We don't know how much, but it is huge. You can take, that's the way it is. Now, in recent years, she's sat on the price of silver by supplying the West as silver demand has increased. This is why, if you look at the Silver Institute's numbers, it's been in deficit for the last 5 or 6 years. So how could that happen? Well, the answer is supply. China has made sure that there's been sufficient supply out of what is in the investment line, which actually is strategic stocks, to ensure that the price doesn't rise. She's now decided to stop doing that. That is why suddenly silver has got a bit under it. This is why you've got a problem in the London market with no liquidity. There is so-called liquidity in COMEX, but whatever is there is likely to be held on to, I think, by the people who have got silver and don't want to part with it. Shanghai's liquidity also has been badly impacted. Now, from January this year, and certainly for the next 2 years, for 26 and 27, China has a new policy of licensing exports of silver. And the idea is to restrict exports of silver even further. So this confirms that China has now taken the view, we can't manage the price anymore, we just don't want to lose our stocks. So there isn't going to be the liquidity coming in at a time when India, which is the most dynamic economy in the world now, I mean, growing, 8–10% per annum, it is where China was 20 years ago, is now beginning to step up its manufacture of technology that requires silver, particularly photovoltaic cells and all the rest of it. And PV production is being subsidized by the government because, on the one hand, they're opening new coal-fired electricity generators. On the other hand, they're sort of trying to persuade us in the West that they're actually environmentally responsible. So, which is why they're doing that. But you've now got India demanding huge quantities of silver. And it's not just understanding that silver is a monetary metal. I mean, one of the things that's happening on that side is that, scrap silver, which you would think would be coming out on these rises, isn't coming out at all in India because people would rather hold on to scrap silver than have rupees. The whole of the situation is an enormous squeeze. And that, I think, is the initial point about where the silver price is going in depreciating fiat currencies. So we're at this fascinating once-in-a-lifetime juncture as far as silver is concerned. And I think I would confirm Michael's analysis completely. I mean, he's coming at it from a completely different viewpoint. But what I see, it's just ringing true what he's saying, that this is going up, and we're going to see this in triple figures, I think, in the not too distant future.
So as we close out 2025, the question isn't whether silver can move higher. The real question is how far silver can rise before physical scarcity and investor behavior force true price discovery. Francis Hunt sees a market storing momentum. Alasdair Macleod sees a system losing control of supply. When both perspectives point in the same direction, investors should pay attention. If you want clear, data-driven analysis of gold, silver, and the global monetary system, without hype, without noise, make sure you subscribe and stay connected. And let me ask you this. Do you believe silver's next move will be a slow grind or a sudden repricing event? Because history suggests it's rarely the first.